Hello and welcome to the Weekend Investing Daily Byte. We are shooting this episode on 10th of April, and the markets remained buoyant for most part of the day. You can see the Nifty here after this consolidation zone got broken out uh, end of March has gained very rapidly from 16,900, 17,000 levels to now almost 17,700 levels intraday. And this trend line that we had from the top of 18,900 is the current resistance. It did go almost beyond it, but retracted during the day. And it is understandable that after a fierce rally of almost 700 points, some sideways move may be possible before. If we do intend to break out here, we may get some congestion here and then break out. That is always possible here, but very good rally from the bottom. Now it all depends whether this rally here is somewhat similar to this rally here and we again break down. That is also possible. So nothing is as such. The roadblocks are not clear as yet. But yes, once we do break out from here, the probability that we will go tag at least the previous highs at 18,000, 18,200, and even maybe 18,009 become much better. So from that perspective, we are definitely in a much better position than what we were here about 10 days back, and we are looking to break through this now. In terms of the Nifty heat map, you can see here Tata Motors, one of the largest gainers on the Nifty, on back of JLR numbers. ONGC up very smartly at plus 4%. Power Grid is up. Adani Enterprise and Adani Ports were up. Grasim, along with Wipro and some other TCS and few other stocks within the plus 1% category, Hindalco, JSW Steel. What was losing ground was some banks, ICICI Bank, HDFC Bank, Axis Bank, IndusInd Bank. All of these were down. State Bank and State Bank and Kotak Bank were virtually flat. Bajaj Finance was down. Levers down on the FMCG front. Nestle also down. Britannia and Tata Consumers also was reeling down. In terms of auto stocks, as I already mentioned, Tata Motors was the star performer of the day. Mahindra and Maruti also were doing all right. So overall, reasonably good mixed bag for the market with the bias towards the green. We are near some resistance, so maybe some cooling off and then the next leg up again. Real estate, remarkable day, again 4.3% up on the back of DLF. DLF, uh, as well as other real estate majors, have been announcing blockbuster sales of their new projects. And with the interest rates plateauing, at least for now, that is the hope and expectation that interest rate cycle has topped in India. These sectors, along with the autos, are likely to boom, and that's what we are seeing for now. PSU banks, bank index, you can see were the worst performers of the day, along with FMCG. Other sectors were marginally in the green. So on a 1 week basis, real estate has done really well, up 7.8% within the last 1 week, and the other sectors are also between 1 and 2%. Mid cap index still gaining ground. You can see here, despite two sessions of flat movement here, again, a further push upwards on the sessions. In terms of caps, we are also reaching somewhat I'll show you tomorrow about where we are on the relative strength index, but it is a very short term overbought situation here. We've had these bounces, dead cat bounces, you may call them, within a downward trending zone or a rally downwards. But overall, if you see, I mean, we are still at the same place where we were last September. So, in effect, for the last 6 7 months, uh, we haven't gone anywhere. I mean, we bobbed around, but really, this bottom that was there at 8,900, which we thought had convincingly got broken, has been restored, and that is very very good news. I think. Was the small cap index very very weak? I doubt if this level would have been regained on the bounce. I mean, it would have bounced a bit and gone down again. So that's my biased view that maybe we have avoided this major next leg down. Similarly, on the mid cap index also, where we did break down but came back up strongly. So my hope is that we at worst we do a congestion here and then start to go up. And in the small caps also, I would assume that we can maybe spend some more time here before breaking out. Nifty Bank, which was the strongest since the last uh, this breakout from the bottom here, actually topped for or made a slightly higher top on the previous session. Nifty made it today, but Bank Nifty was leading and Bank Nifty was down today. So, I mean, the fact that I'm telling you this is because once you start following the Nifty Bank, you can see that on many, many occasions, Nifty Bank is leading the entire market, and Nifty Bank had created this somewhat of a top at the exactly at that resistance line. So chart, see, a lot of people say charts are useless, trend lines are useless. They don't tell you anything, in affirmative or anything confirmed. See, nothing is confirmed in this world. Unfortunately, there are no guarantees, and there is nothing that works 100% of the time. All you need is some indicator or some pattern or some chart to tell you higher probability things to happen. If you are able to get 70% of your calls right, you made it. The best of traders actually need only 30 40%. But I mean, if by using some of these helpful tools, if you are able to improve your probability of success in your trade by a few percentage point, I mean, why not use that? Because everybody's watching. See, what is a trend line and what is a moving average? These are just imaginary calculations. There is no line in sand there, but because everybody is watching it, and hence it becomes important. So it is entirely a psychological game. Everybody's psychology is that there will be resistance here, and it happens that way. So while there is no reality to these things, but in reality these things work in a higher probability manner. So from that perspective, charts and trend lines and resistance lines are very very important. I just very quickly go through what indices and weekend investing strategies did today. So all indices on the large and mid cap were very very flat today. Similarly were the weekend investing strategies. Within the mid and small cap index, mid and small cap 400 gained 0.3%, but both these strategies lost ground. One was flat and one lost ground. Small cap index also 0.2%, but both strategies lost ground today. And CNX 500 was slightly up, but we had a similarly almost a null sort of a day from both these perspectives. So nothing much to report here. The Tata Motors stock, as I was mentioning, is the focus of the day. On a reasonably high volume, I think the highest volume in the last year, and one of the highest volumes in the last couple of years. A very good breakout sort of a move today, although it did give up some of the gains by the end. So I'm sensing that if you can buy this maybe on the dips towards this trend line, and this may, I think, a medium term outlook looks very very positive here, with some stops near below the gap. So this is something that one can look for in terms of having a trade setup or having a watch list on Tata Motors. See, anytime a stock really breaks out uh, versus its peers and on great volumes, and especially above a trend line, it becomes a very good candidate that stock is wanting to now move to another level. That another level could be 540, it could be even further. Maybe it will just fizzle out, I really can't say, but there is a propensity and a probability that that can happen now. So from that perspective, it becomes a higher probability trade to watch. So thank you so much for watching this episode. I hope you're liking all this content. Do let us know if you have any queries. Let me just also quickly go and see my question panels if I have any queries today. Yeah, so I have a few. Let me just spend few minutes on this. Let me also give you a screen for sharing the charts. Just give me a moment. Okay. Okay. So the first question I have is from Ashwini Sharma. Is now for fresh buying? So I just mentioned about Tata Motors. I hope you've seen that particular part. Pritesh Soni also has question on Tata Motors. So Tata Motors should have been answered. Ankita says, "What would be your best pick from the EV space?" So I don't really have, picks from EV space in my watch list. And really, I mean, the way we work in momentum investing is that we don't do a bottoms up approach where we are not looking for ideas and then trying to find stocks. Rather, we are allowing the stocks to tell us which ones need to be bought. So stocks that are hitting new highs, stocks that are having high momentum, they will come into our filter list, and based on our various algo criteria, we will be selecting those stocks. So I don't have a bottoms up approach to give you a idea about which is the best EV stock. But in general, I would say if you list all EV stocks, you create a momentum ranking on it, and the ones that have the best ranking, you should go with that with some stops. There is a question on Relaxo from Ganesh. Relaxo, from the chart I remember, is a bit of a sad chart. If I see this on the weekly, and let me just go to non. So Relaxo has been a amazing run for the last decade, and now it has fallen off from 1450 almost to 750. So a great sort of a 50% kind of a correction has already come in. I would now wait for a pivotal formation wherein some setup is there, because this could continue to do this, or maybe some previous high, if it is able to take off. I think that will be a setup where you will be able to at least have some stops, do some position sizing, and then again go for it. So my sense would be that it will probably find its feet and then go for it. So maybe some more time before, but where it consolidates and starts to go up. So that's something that I would look at. Uh, any view on Z is asked. Sandeep Chordia is asking this. Let me just pull up the chart for Z. So Z again is a kind of a dull chart for me. There was some action here, so maybe you could look at once it does break out, of some sort of a pattern. But right now it does look like it's a flag. It was falling very hard, and then there was this flag, and now it has started falling down again. So I would steer clear of this as of now, unless you have some extraordinary news about why it should go up. And if you do, then of course utilize that. But my sense is that currently it is not. It is still making lower lows on each drop, and this was a sort of a dead cat bounce that happened. PB Infratech is the question from Mr. Manoj Verma. So PB Fintech, sorry, PB Fintech. I think PB Fintech is doing much better than before. I was tracking this last month, I think, where there was another question on this, and I think this falling pattern came to an end, and some consolidation happened here over say 6 month period, and then it broke out above 500. So I think from that perspective, it is uh, definitely a stock that is currently now gaining, and you could maybe use a base at 546 to really have your uh, your stops here, um, and this here and buy on dips for further rise. So you could keep your that you have a very small exit risk even at 500, but if it continues this higher high higher low pattern, then you may as well achieve 800 or so on this. So this is looking good. It's kind of a sort of a double bottom here, and that to me is a good decent consolidation in this entire 1 year period actually. So this it's good to take a small short risk, I think. Uh, how do you see one big risk in the market, Arun Singhani? So I think the biggest risk is overseas. From overseas, the recession fears that are there in the U.S. market remain the biggest risk. If they are unable to control uh, the interest yield curve there, that will spill over definitely to the Indian market also. And one very good sign of that is gold price. Gold always goes up in uncertainty, and gold is looking extremely, you know, I would say very strongly set up to go up much further. So if gold is going up much further, then that is a bit of alarm bells for equity. So from that perspective, I would think that one should remain have asset allocation, because these some big risks will come without any warning, and the warning signal is gold, and it is ringing very hard right now. So from that perspective, while we all wish and hope that nothing really bad happens in the equity market, but the warning bells are currently on, and one has to remain cautious that something ominous can happen in the equity markets, and that is always the case. Actually, I always believe that one should not be so gung ho about the equity market that I'll put all my eggs in that basket, and nothing wrong can happen to the equity market. That is not my belief. I think the way the world is structured right now, anything and everything can go wrong. So while I like the aggressive returns from equity, foolish enough to put all my eggs into that basket. So with that note, I'll end today's session. Thank you so much for joining. I hope I've covered most of the queries. I'll see you in the next one.